All right, good day, good day. All right, so our first target was achieved right here. In fact, we're going lower. Look like we're going to the 61%. You remember when we use this strategy, we want to go for 50% first. Second target's a 61%. If you decide to have a secondary target. Now, so what was the strategy? All right, let's go back and let's go to the daily chart. And this is what I need you guys to do on multiple um, pairs. Now, I'm not going to, because I have this marked up, I'm just going to go to a different asset that I don't have marked up. I don't want to remove any of these. But if we're coming into the market, all right, you go to the previous day high and low. All right, you use a indicator. All right, so you see up here is the previous high. All right, and this is the what? The previous uh, day low. If you don't have that indicator, you could easily create your trend line. Right, you just go up here, just draw a line, or you can use your horizontal. There you go. All right, so take those off, but and you can use your horizontal ray. This is over here. Go to your left, click on this little arrow, and you go down. You see a horizontal ray. You can use that. All right, go to the side of it. Boom. Of course, you see that if you use the indicator, just a lot easier. Just do the work. But if you're getting your reps in, try doing it without the actual indicator. You know, it's just easy getting your reps in. Now, what do? We go down to the 30-minute chart. If you want to go to the 1 hour, go to the 1 hour. It doesn't matter. Just rep this over and over again, guys. Rep it over and over again. All right. What do? So let's see. All right. So this is Friday. All right. This is another liquidity. This is another previous day high. All right. And this is a previous day low. All right. Let's take this off. Maybe to do that. Let me reset this chart. Hold on, guys. Sorry. Reset. Reset. There we go. All right. So look what happened. This did what? It swept the liquidity. All right. And then it came back in the range. We can measure. All right. What would be the target? To the what? 50%. What happened? Came to the 50%. Next target, what we looking at? 61%. The short to get there. Rinse and repeat. Okay. You measure the move from that low up to the high to where it's at. All right. And then that'll be your targets. Clear as day, right? Continue repping this. Once again, it is impulse. This is the what? Previous day. All right. So we're still uh this is going to be from yesterday, but now we're working on this one. All right. But this was swept. All right. And then it created a new daily high and then it came back down. Same thing. Take from the what? Here. All right. Now, this didn't get to the 50% yet, but it look like it's on its way. We'll fight to get down to this level. Now watch this. All right. We got a liquidity sweep down here. All right. So this is yesterday, Saturday. Today is Sunday. So this is the new one. Okay. So when I took the trade on Bitcoin, it was based off of Friday's levels. All right. So now you're gonna go from the top down to the bottom. And we're gonna play the same game, guys. Liquidity sweep. All right, here we got it. It swept the lows. We'll trade it back into what? 50%. Now, here's some entry techniques you can use. You can, whatever candle comes out to sweep, all right, you're looking for a candle to engulf. It engulfed here. You put your stop loss below. Keep it simple. There's another method you can use is as soon as it crosses 23% on your fib, you just take the trade. There's multiple ones. There's nothing else. There you go. Either you wait for engulfing, you wait for it cross to 23%, stop loss goes below the range. Keep doing it over and over and over again. And guess what? All I need you to do is just mark up your charts and doing it. Notate on there, write on there, mark them up. What do? Go up here to this camera, up to the right, either copy image or copy a link, drop it in the group or email it to yourself so you can see. Stop worried about whether you got it wrong. It's not about that. It's doing the reps. These are what we call little either base hits or little jabs. You're scoring points. You're scoring points. Not trying to knock it out the park. We'll have other strategies that give us longer range of what we're trying to do. This is not it. This is designed to help you guys see how to take advantage of the game. Now look at this. This was a daily on Wednesday. All right. It swept the lows and it came back in the range and it was more powerful. All right. So even if we was back here, we would have just measured this. All right. Of course, it went through all, but what are we doing? This is the candle that came out. This engulf. So it already crossed 23. All right. You're in. Does it matter? All right. You take it up to the 50. Second target be to the 61. Of course, it went higher. Then watch this. Now that we have a true break and close above here, now we can measure this to get some upside targets. And all three targets have been a hit. It's achieved. Target 1, 2, 3. That's more of the long range. But we're not focusing too much on that right now. It's to get those daily liquidity sweeps, and you're to see you can build consistency just for that. So continue. You can do a stop. I don't know. Let's do SPX. It doesn't matter. Look at the daily low. It swept. What's one of the entry criteria? You wait for what? The candle that swept out and be engulfed. It got engulfed right here. You're in the trade. What's our target? 50%. What's the second target? 61. If you don't want to go to the 50%, you can get more on the table. Just make a rule that you go to the 61. You can make a rule that if it gets to the 50%, then I move my stop loss deep into profit, but my whole goal is to go 61. So you can knock out two things for one, basically. 50% is your move your stop loss into profit level, and 61 is your secondary level. You can do that. I mean, it's your primary level. You can do that. You can do whatever you want. The question is, can you repeat the same process over and over and over again? Go to the daily. And guess what? You're going to see this on higher time frames too, right? So this would be the previous day. That would be the previous low. If you don't have an indicator, draw it up. Now that the market is closed, this is going to be the previous day high. And we want to monitor these levels. Stop making trading more difficult. It's not. You gotta get out your own way, get out of your mind. Keep doing the same thing. We're gonna keep this thing simple. I need y'all to get bored quickly. I need y'all to get bored, man, so you can get boredly rich. That's what it gotta be. We gotta work on it. We gotta keep doing the same thing. Keep looking for excitement in the wrong places. This is not the place to be looking for no excitement. Excitement is gonna be when you can withdraw money, you can do what you want with it. Until then, you got to get disciplined. Mark up the daily highs and lows. Go down to the 30-minute, draw your fibs, look at the levels. If you want to do extensions, you can. But look, this is a higher time frame right here. Let's see what the red, I believe, is the monthly. Let's see. Did I read? Did I delete? Uh, let's see. Let's see. So, what's my something changed on here. Let's go try to see something. I don't know what's going on. Anyway, I believe this is the monthly, and the yellow is the weekly. All right, so these are weekly. Let me see. Yeah, yeah, and then this is the monthly. So the start of the month. See down here. This is November 1st, and they go all the way to like Friday the 29th, going into Monday. So these are you can play the same concept on the monthly highs. All right, look at this. This is a monthly. All right, it broke, swept, came back in. All right, what do I want to do? Take it from the origin, all right, up to the what? The breakout point up here. What are we doing? We're doing what? Go to the 50%. What is that? 50. All right. If you do not want to do the 50 as your first one, you do what? You say, hey, I move my stop loss here to 50, but I'm looking to go to the what? 61. And if you did do that, all right, depends on where your stop loss is. It probably got hit. So the first one was hit, but you also found what? You can find another entry to get back to the 61. Look at price. Came right here to the 61%. Look, guys, keep saying do the same thing over and over. Can you do it over and over and stop worrying about whether you got it wrong? It's not about whether you got it wrong. The thing is, are you doing it right of doing the reps over and over and over again? Stop making this stuff difficult. You can go anywhere online and you can find all the free trading strategies. Everything is free. You might even find some free signals. You can do all that stuff. This is not what this group is about. The group is not about uh, creating some new strategy that nobody else is doing. Now, we may look at the market differently, but you still got to do the same thing over and over again. All right, look at U.S. oil, previous day high, previous day low, liquidity sweep, push back in. Same patterns showing up over and over. 50%, 61%. All right, watch this. Now, here's some things. This trade actually probably wouldn't work out in your favor. Why? Because there's plenty of candles that are coming out and it did some engulfing and it kept going lower. That can happen. So guess what happened? The stop loss got hit. Even though we found some common ground and we got up. Now here's the rule. All right, there's the other one. The 23% is your safest one. That's your conservative route. All right, so let's go back. All right, so let's say, all right, let's say this is the liquidity sweep. Did the 23% get across? No. That's why we use that strategy. This is for your conservatives, right? Watch this. Right? So every time it goes lower, you gotta adjust it. What are you doing right now? Nothing. All right. If you use the other technique, it's more aggressive. Did it cross the 23%? No. We're not even in a trade. All right. Now, all right. Now we're in the trade. Okay. And you still gotta be worried about drawdown. All right. Your stop loss is somewhere below here. All right. Give yourself room. And now the trade played out beautifully, following the 23% rule. All right. So we got different. A reason why I give you different techniques like that is because why? You got some people who are more aggressive. If you're more aggressive, then you can do that. You may not have the patience. I prefer the 23%. The 23% is a strategy that I created. I mean, there may be some other people out there do it, but I started paying attention to the 23%. The reason why I came to this conclusion with the 23% retracement level is because I started studying price behavior and I started noticing. I was like, there has to be another field level that price continues to respect. And let me go back and I just looked at hundreds and hundreds of charts and I was like, man, the 23, every time it crossed, and if it come back below it, it has a high probability of going to the 61%. And I started testing that and I started using that. And I spoke about this with many. A lot of people don't. They don't use this. Okay, fine. Maybe I thought something was wrong. I don't know. Self-sabotage is real. Get out your way. You could go online right now and there's a legit strategy that's probably 10 times better than what you learn in here. The question is, do you have the discipline to go and do and implement that strategy over and over and over again instead of chasing these phantoms of these so-called wins and losses and all the other stuff? If you can't, then you need to settle down, and that's why we got this trading academy. We're trying to develop discipline and consistency. I'm not trying to sit up here and open you up to a whole new world of some magical system where you just gonna be profitable without you doing the work. You better go get do the work. Why you think every year there's thousands of new products on how you can lose weight? Because a lot of people don't want to do the work. They want the easy way out. Choose hard and be consistent with it, and then it'll become easy for you. That's my rant for the day. I just saw I went over something. I went on the equities market with S&P. I went over the commodities market with U.S. oil. I did some crypto. I did forex. The same strategy works. Do your job. Hit the like button. I'm out.